Hey, Crypto Hotep here with another investing video. And again, I'm back. I did put a note out on YouTube. The family and I, we were on vacation last week, so that's why we didn't get a week six. So this will be week six for the family portfolio. And if you're unfamiliar with what the family portfolio is, or the methodology behind that family portfolio, please check out week number one. In a nutshell, we are tracking the progress of my family's choice in stocks as well as my own, and just tracking that investment progress, as we learn more about dividend investing and just investing, period. These videos are for my own edification, and hopefully they can benefit my children when I get older or when I'm gone for that matter, and maybe they can carry it on or become interested in investing as I am. Again, the methodology behind how my family chose the stocks is in week one of that video as well. So definitely check that out. But fast forward to week six here. And before I begin, anything expressed here is strictly opinion based. Please do your own research, not financial advice. Please consult a professional before you look at investing or trading stocks or crypto for that matter, or anything volatile. Before we jump into the portfolio here, we'll jump back into week five just to catch up on the actual balance of week five. Week five, it was about 515. That was on the 5th of April. So the balance was about 515. That cash flow was about 375. And our weighted return was around a little bit over 3%. Here it's a different story. Even though the balance is up, so balance is steadily rising, right? So we're at 559 as of April 18th. Net cash flow is at 438. Market gains significantly down in the negative, and the weighted rate of return is now at a negative 2%. Why is that? A lot of geopolitical items that are going on in the world today, with the potential of a war between Iran and Israel that's currently going on, and that is affecting the market substantially. And we will actually see that as we dive into these stocks here, because any stocks related to tech that you'll find out, like technology, anything that's not quoted as a necessity, if you will, is quote unquote bleeding out red, i.e., it is in the negative. So, this is the portion I found with investing, which is the toughest because you have to, I wouldn't say be blind to the fact, but you have to kind of zoom out. You have to zoom out and find out what your why is in terms of investing and look at the bigger picture. While the pain may really hurt now in the short term, it's the situation is only short term. The longer term is we're looking more to the upside. But as with anything, let's look at the time currently that we have now. So we're negative 2% weighted rate of return. The dividends we earned are 1.84, $1.84. Okay. Before we jump into the stocks, we'll go to the activity here. And this is the activity that we've had since we've last spoke here. So we have had a couple buys here. We had one buy for Apple here on the 10th. Then we did have a deposit, and that constituted to 9 buys. So we had 9 buys, and this was on the 11th. So we had Google, Costco, Tesla, which is our youngest, as we know, Celsius, which is my wife. As if you guys have been following this channel and been following the videos, my wife has really been scoring big with Celsius. So just kind of add into that bag. Apple, again, as it's down right now, perfect buying opportunity, in my opinion. McDonald's, Pepsi Company for my wife, Nintendo for the kids here, And then we have Amazon for our middle child here as well. So we had 9 buys on the 11th. Then we also had some small buys here, and these were for, I believe these were for me. So we had Public Storage, that was in part of my real estate section, Pfizer and Johnson & Johnson here. And then we did have some dividend action, so which is cool because I haven't got any dividend from Federal Realty Investment Trust. So I finally got some dividend. Only 16 cents, but this is a smaller account. We're building up. So my first dividend from FRT on the 15th of April. So feels good. I do like that. And last but not least, on the 15th, I finally added my two positions that I haven't added any capital in, which were ExxonMobil I added back into, and then Union Pacific in the industrial energy section. So I've been waiting to add into these. I finally was able to add into these two companies here. And so let's see what's going on in the portfolio here from the family perspective. Okay, so we'll just start bottom to top. So our youngest is probably uh, down the most here, down 15%. Why? Majority is because of Tesla and also Nintendo, it looks like. But I would say the most hurt is felt on Tesla currently. Um, Tesla has been downgraded several times. And there's a lot of bad press against Elon Musk and Tesla as a whole. What am I going to do with my youngest position in this? I am going to keep it for right now. Again, my youngest is our youngest child, and um, they can be exposed to a little bit more volatility as it is. And currently, Tesla is probably the most volatile thing in the market currently. So we're not going to do anything as of right now. Okay. Um, let's go to my wife's stocks. So down a little bit over 1%. Celsius is finally it. Celsius's um, Celsius's rocket ship is finally slowing down just a little bit. Year to date, we're looking at down about 15% currently. We all knew this was going to happen. Not concerned about Celsius at all, but we knew that the sustainability of price just keep pushing further and further up for Celsius. It wouldn't be lasting that long, and it would need some sort of a breather. So currently down 15%, not really worried because my wife's portfolio is nicely stacked with PepsiCo, a great brand, great company, great dividend stock, up 4%. And then the old faithful Google, which is up over 10% for her as well. Let's go to our middles stock. So we have Amazon holding the bulk of the load, Nintendo, which was on our youngest stock as well as our middle stock. So bringing it down over 15%. And again, because of the nature of the geopolitical environment that we have currently going on, um, again, you're going to see a lot of technology and a lot of risk related assets selling off, i.e., those technology assets like Nintendo, like Apple, like the Tesla. So in these type of environments where conflict is at the forefront, most of these stocks will be in the red. Now, the common quote from Warren Buffett in Berkshire is, when there's blood in the street, you need to open your wallet. That's where you need to be greedy, is when there is blood in the street and when people are fearful to buy because they don't know what's going to happen. Now, obviously, you want to understand um, your own financial picture before making those purchases. but I have always been on the offensive when there is fear in the market. So that's why I said previously with our youngest, with Tesla, honestly, this is a good spot to just keep putting some money into Tesla. And he has other stocks, or our youngest has other stocks in the portfolio, which can help cushion that. So, I think that right now we're in a decent and okay spot to just keep, again, DCAing, dollar cost averaging in these stocks, and just keeping an eye on them, on the progression. And then our oldest actually moved up the ranks, still down 7% here, but our oldest portfolio is very simple, just two stocks, McDonald's, Apple, split 50-50. Again, these kind of two risk assets here, or stocks. So, you're going to see that decrease. So, I think the mission still stays the same, where if you can dollar cost average in based on your financial picture or your financial situation currently, then just keep doing that. The worst thing that you can do is stop that cruise control mindset, because you probably won't get prices as good as these in the future. So, that being said, we will look at mine. And, as you guys know, mine are separated by sectors. And it's very surprising here. Needless to say, my portfolio is down the least at about 2.5%, a little bit over 2.5%, right? With that being said, technology obviously considerably down 2%. But one sector that's up, not surprisingly either, because this is expected, right? Industrial and energy across the board, across the financial markets, is up just because of this environment that we are in. um, Solid, quote unquote, solid investments like the gold and the silvers and those type of things, those are up as well considerably. And then also reliable industries like industrials and energy, things that are related to quote unquote conflict or war related stocks, are up. And as you can see, all my stocks in industrials energy, or the stocks in my industrial energy, are up considerably versus everything else. This is up 3%. The top gainers, ironically, Centos, Chevron, Duke Energy, Caterpillar, John Deere. These two are carrying the portfolio in a big way here. So very interesting indeed. And I can tell you, this isn't a surprise at all for me. When I saw this, I was thankful for this sector of the business, or the sector of my portfolio, because that did lessen how much everything was weighted down. And that's a good thing when you're diversifying your portfolio. If you do have a sector of your portfolio that obviously is up when everything's down, it helps even out that weighted average. So the most that's down is obviously pharmaceutical. Pfizer has been hitting 52-week lows as of late, as you can see here. So not really surprised about Pfizer currently. I'm not doing anything with that. I consider Pfizer a bargain right now, as well as Johnson and Johnson. So I'm going to keep that. Um, and consumer staples, they actually aren't down that much considerably. Everything. I am thinking that my consumer staples and my energy are going to be my top gainers in the upcoming month or months, if this conflict between Iran and Israel continue. And that's only because historically, consumer staples like Kraft, Coca-Cola, McCormick, those kind of quote unquote reliable companies usually weather these storms, because people still need to buy these items. So that's my guess for the next coming months. But we will see. We will see. And with that being said, we will jump right in really quickly here to the stock of the weekly update for the portfolio, and that's Coinbase. I am proud to say that Coinbase and myself have garnered a partnership, and the Coinbase affiliate link is in my YouTube profile, or YouTube channel, I should say. So if you do need a Coinbase account or want to switch to the Coinbase Advanced Trading Platform, please click that profile. Coinbase is the crypto company that they first got into crypto with their obviously centralized exchange. Then they branched off to their Coinbase wallet, and they have Coinbase institutional trading now and a whole host of other things related to cryptocurrency. As of right now, their price is up. From a analyst perspective, they are at a buy. Their target price is about 183, so still a little heavy on the price here. Coinbase, this stock sits in my technology portfolio and M1 Finance. Currently, with their revenue, they've seen decent size growth. They have had a decrease from 2021 to 2022. They closed the gap in 2023, though, as well as their gross profit also. And their net income was negative in 2022, but they did bring that full circle positively in 2023. Okay. Looking at the balance sheet, one thing that stuck out to me was their cash equivalents. That did grow in 2023 from 2022, which I do like to see, as well as their cash and cash equivalents. They also did have good cash growth. So they had cash growth of 8%. Again, coming from a negative year in 2022, that's what we like to see in the green. Their retained earnings have also increased from 2022. And their debt growth has also gone into the negative more from 2022 and 2023, as you can see here. So decent statistics in terms of balance sheets and cash flow for Coinbase here. A lot of things that they are doing in the cryptocurrency markets are all predicated on their experience and on the years of experience that they have in the industry. This is one of the only stocks in my portfolio currently that is not a dividend related stock. And the reason why is because I simply just like Coinbase. They were the reason why I got into crypto over four and a half years now. And they were the first ones who teach me about crypto with their Learn to Earn program. And I just enjoyed their platform. The platform gets mixed reviews at times, but it's always worked for me. I've always come back to it whenever I've gone to other exchanges, and I always come back to Coinbase. And I have no problem with them. Like the company, I do like Brian Armstrong, the head of the company, and I have faith in what they're doing. They're doing a lot of good in cryptocurrency with their L2 base, which ironically is called Base. And we can get on that on a crypto topic. But they have a lot of development and a lot of acquisitions around in the crypto space right now, and they're the leader. Especially with the whole deal with Binance currently, like there's really no other game. There's no other show in the game right now, especially in the U.S. Unlike Coinbase. So, with that being said, I will bring up the chart here with Coinbase. So we're looking on the daily. As you know, these blue lines signify a weekly key level, whether it be support and resistance. And as you can tell here, we have been on an upswing. Okay, I did draw my Fibonacci's levels here from the low of about 114.50 all the way to the high at an even 283. And since that high at 283, we've slowly come back down, retested the 253 level, rejected that, come back down, retesting the looks like 222 level. This candle doesn't look good to me. This is a potential of a rejection, and we may be coming back down, but to me that's okay. And the reason that's okay for me is we have a nice golden zone here. So again, the golden zone is, for me, it's anywhere between 50% and 61.8%, meaning that the price of an asset has retraced or moved back down over 50%. So usually if price can get into this zone here, typically this would be a good area to buy. Now, a couple pieces of confluence that I think are helpful are, you have the 100 moving day average here, this orange line coming up, that's that's in, or that's meeting, I should say, this golden zone, right where price may come and down into it. So I would be watching this. I can see the 100 moving average come in here like this. We also have, coincidentally, quote unquote, a key level here on the golden zone as well. So again, we don't just place the blind trades, but if I was a decently betting man, what I would suggest or do is, we can buy in this area, be somewhere in this area here, whether it be 188, 185, somewhere along here. And at the very least, I would expect a move back to 215, 216 level right here in the short term. Okay. Coinbase's price typically mirrors that of crypto, which would make sense, and Bitcoin. So if they are pumping, expect Coinbase to be pumping as well. If they are dumping, though, expect Coinbase to be dumping as well. So I think with the whole current situation overseas, we may see a dip down into this area, and this wouldn't be out of the question. Okay. So with that being said, guys, I'm going to cut this video here. Thank you again. This was the week 6 family portfolio update on M1 Finance, and hope this video was helpful. If it was, feel free to like, subscribe, comment, and let me know what you guys want to see later. But as always, thank you and happy investing.